Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. $99. Good evening, everybody. My fan is really close to my mic and I could hear it coming through this. It's picking up. It's picking up. It's picking up. It just loud like that. Is it always that much air in the background when I be streaming? Do it always pick up that much air sound? Let me see. Pick up that much air sound? Yeah, it's pretty loud. Let me see if let me see what happened if I turn this down a little bit. That's like mad loud. I didn't know that it was that much noise coming through like that. All right, let me see what like that. It's still let me see what like that. It still got a lot of background noise. I don't know. Sound like a lot of air. I don't like that. Y'all be suffering through that every night. Well, I know it's hot back here tonight, so y'all gonna suffer through a little bit more background noise, cause yes sir, I need that fan on tonight. These lights are cooking me. Oh, I forgot to turn on this over here. Good evening, everybody. Y'all pull on up in here. If this is your first time tuning in to Tim's Tidbits, while I do stuff on my home phone, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Gunday, as you see it behind me back there. What's up, Felicia? That just means big spot if you don't hablo español. Get into another episode of Facilitation February. Let me pin this link in then, because I don't like looking down when I'm talking to y'all. I like to keep the eye contact with y'all. Right. Go to youtube.com/the new TLR to see my screen and join the session. I'll say join the lecture. That sounds more educated. And let me pin this comment and sit this right here. Now, how y'all doing tonight, man? Who we got up in here? Let me see who we got up in here. Hey, we kind of slack up in here tonight. Did y'all not get the notifications? Y'all didn't get the notifications? What's going on this Thursday night? Do I need to, somebody said something? I heard somebody say something.
I said, yeah, I got it.
Oh, I'm like, well, man, we getting less and less participation. Do I need to go ahead and terminate Facilitation February before the, like, we getting slacking? I'm be talking to myself in a minute. Be talking to myself in just a minute. Computer audio is being shared in mono. It says my computer audio is being shared in mono. Okay. Does that mean you can't still? Can y'all still hear it? Can y'all hear that? I wonder why it gave me that notification. Did y'all hear that?
Yes.
Oh, I wonder why it gave me that notification there. Maybe because it want me to know that it's being shared in mono. All right. Let me see what's going on. Let me see what's going on here, man. Hold up. Hold up. Hold up, hold up, hold up, hold up. Wait. Hey. Where is everyone? Y'all know how I get. Y'all know how I get. But Tim, we really need this. Tim, don't shut everything down. We really need this, Tim. And can't nobody commit. It be a very select few that power through. Very select few that power through. And people be like, we be here all the time. I know you do. I know you be here all the time. What's happening?
I'm still alive, but see, he asked me if he could come over here till Zeno come back to Columbus. He's supposed to be staying with Zeno tonight. But
Sorry, y'all. Had some family matters that I had to attend to real quick. All right. But if you would have been here on time, you'd have known what I was doing. You see, and I'm looking off to the side, talking like this right here. He would have been like, oh, he must be not talking to us. He must be muted right now. But I was in the middle of a vent before my son came and asked me something. You know what I'm saying? I was in the middle of a vent. And I know y'all get tired of me beating y'all up. Cause y'all like y'all pretty much the faithful few who be here all the time. But we went through the numbers before. When I showed y'all the numbers of people that's actually in the gang versus the people who actually show up on a regular basis. All right. You know what? It's my fault. I be doing too much. I be providing too much value. That's what it is. I be doing too much. And since I do so much, the people don't have the time to keep up with what I do. That's what it is. I just had an epiphany. Like Marcus on Bad Boys. I just had an epiphany. Woosah. Good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it is your first time tuning in, you just caught me in the middle of a rant. Like I said, this is design. Facilitation February is designed for my family, for the gang. And I just got the curtains pulled back out here on Al Gore's internet. See, I just opened up the curtains, I said, and let y'all peek in. And sometime when you peek in, sometimes you just hear family business that's getting discussed. So, if that caught you off guard, like, what did I tune into? I jollipies. It ain't normally like this most of the time. But sometimes I get in my feelings because I want it so bad for other people. And sometimes them other people just don't seem like they want it for themselves. Because when I start doing something, I do it. I'm talking about I go overboard. Like my family, like my new setup I got here, my family is in awe. They like, man, this is really nice. It was like your first one was nice, and then when you changed that, it was nice. Then when you changed that, it was nice. And then when you moved it in here, I thought that was nice. And then now this right here, that right there, this right here. Every time when I do something, I do it. And so I expect other people, when they do something, they do it. And they be really into it. But over these last few years of doing the gang, I realize people just be saying they want to do stuff. people be like, oh yeah, I want to do that. And so I go all in. If you're on Instagram, go over to youtube.com so you can see this nigga named Shaq Daddy. Golly. Why people put anything on the name these days? Hey, go to youtube.com/the-new-TLR so you can see the screen and join the lecture. Right? But people just be saying they want to do stuff, man. And so I go all in. Cause when I do stuff, I'm talking about I go all in. I go, you know what I'm saying? Uh-oh, you can see that door. That's how wide. That thing real wide. Yeah. Right. I go all in. You feel me? Right? And so I can't help it. So I expect other people to go all in. But people, they be like, I want to do this. And then they'll start and stop and start and stop and start and stop and start and stop and stop and start and start and stop and stop. And I'll be like, we talked about that already. And then I'd be like, okay, let me find a way that I could say it better, because it's like I done talked about it and you're not getting it. But I'm starting to realize it's not that you're not getting it because I'm not giving it right. You're not getting it because you're not putting in the work. You feel like you're putting in the work because you do it passively. And this ain't one of them things that you can do passively. This is one of them things that you gotta do for real. And so the numbers don't be making sense. Meaning the participation to the, you know what I'm saying, things that I be offering. And then when the realization just hit me just now, I'm like, it ain't them, it's me. I'm doing too much because I've been, and I'm still in a good community. Right? I'm still in a good community. But when I tell you, these folks, they charge way more than I be charging for my time. And they don't be doing the stuff that I be doing when it comes to like live mentorship interaction. You know what I'm saying? Now you may have people, they put out very nice edited videos. You know what I'm saying? But you can't get that live one-on-one interaction with an edited video. They might, you know what I'm saying, do something once a week, might do something once a month, right? I'm in a Discord community. I mean, I'm in a Patreon community right now. You know what I'm saying? We get like 1, maybe 2 live streams a month, right? We get like a couple vlogs a month. I see Buddy Mo on YouTube live than I see him in the Patreon. I get more interaction with him on YouTube than in the Patreon. I'm paying for the Patreon. I be doing too much, man. I be doing too much. My bad. I slipped off into it again, y'all. YouTube community. Tonight, we talk about breakers.
Wait a minute. This just you talking to us too? Because we locked in.
If you was here on time, you'd have heard me. You'd have heard everything from the beginning.
All I heard was, Lord, he about to shut it down again. I apologize.
If you was here on time,
Don't have me with my fingers crossed, toes crossed.
you'd have been here on time. You would have heard everything. Look at it. You're not doing too much, and then exactly. Hey, look here, man. Hey, before we get started, I need to go get the YouTube video together. Right? I'm gonna share my screen here. God dog it. I promise you, it's got to be Windows 11. It's Windows 11 that changed all this up. God dog it. All right. Okay. And then y'all talk about my screen was blurry inside Zoom when I was sharing it through what's the name? So now I got to remember to share the screen twice. I got to remember to share the screen twice. Now, while I'm going to get my YouTube videos together, y'all make sure y'all go out there and support I call everybody my little sister because I'm an old man. I'm a grumpy old man. Everybody, my little sisters and little brothers, they be like, you know I'm grown. Or you know I'm grown. I ain't little nowhere. But y'all go out there and support my little sister, a.k.a. Rhonda Green. You know what I'm saying? If you speak Espanol, you know I'm just rolling them R's on the, you know what I'm saying, Rhonda. And in the green, the Rhonda green. Y'all go support Rhonda. With her self-published book, Before the Butterflies. It's a dating book. She said don't be dating no scrub. A scrub is a guy that can't get no love from me. Hanging out the passenger side of his best friend ride. That's not what it's all about, but she said pick, you know what I'm saying, somebody. Don't be going up there picking no pookies. Pick somebody that's worth his salt. Even if he's not where he is now. Don't get fooled by all the smoke and mirrors of the gift of gab and the internet foolery. You know what I'm saying? Go see what she talk about in Before the Butterflies in that other book. I bought that other book the other night, the one that I ain't gonna read either. It said it's shipping it to me. That's what it said. It said it's shipping it to me. I was trying to do it on live, but it had too much of my personal information up there, so I couldn't share that with y'all. So, but when the book come out, I'll show y'all on the screen that I actually did it. Y'all won't think I'm cap.
Thank you.
You're welcome. Rhonda Green, you in here. Tell the people about your book.
The books are both about relationships and dating. So by reading the book, you'll come off with a better understanding of what you want out of a long-term relationship and have better insight about how to choose wisely and make sure you're not wasting your time.
See how she said that's so much better than me? Do you see how she said that's so much better than me? Now, without further ado, again, self-published, so go support my sister. Go support my sister. Self-published. For those who like to, you know, put a whole bunch of qualifiers on it. Black self-published female author. If you want to put a whole bunch of qualifiers on the front of it, if you know what I'm saying, if that floats your boat. Tonight we talk about breakers, man. We talk about breakers. Facilitation February. I'm going through the Art of Reading Price Action playlist, video by video. I pause it when need be if I need to take a deeper dive where Michael has given us more information on the subject, or I have a better understanding of it, or I have a better use case than I did back when I did this. I'll pause it, do a deeper dive. At the end, I'll leave the floor open for the gang to ask questions. I'm not monitoring the chat in the YouTube. I'm not monitoring the chat in Zoom. I'm focusing on the video. If you have a question, unmute at the end. Gang ask you questions. You're free to talk amongst yourselves in the chat on YouTube, but I will not be monitoring the chat. Before we start, shout out Felicia if you still in here. Shout out, what's up, Mikhail? I ain't seen Mikhail in forever. Mikhail, if you still in here, what's happening? I see more numbers than I see names over there, but them all the names that I see where people commented something. So that's all I'm gonna shout out. All right, that's the last time I'm looking at the chat. Now, let's get into these are the breaks. Breaker, 19.
Greetings, salutations, marhaba. How have you said in your neck of the woods? I'd like to welcome you to another episode of Le Art of Reading Price Action. Again, welcome to another episode of The Art of Reading Price Action. And in this episode, we will be discussing the breakers. That's right, we are discussing the breakers. Now, before we get started, I'd like to let everyone know who's been reaching out to me the way you joined the mentorship. Break it up.
Oh man, I used the same joke back then. You know I'm old, recycling jokes.
Now, breakers. What are breakers? Yes, I changed the picture this time. Let me turn on my fancy dancing. Yes, I changed the picture this time. What are breakers? I call them reference points. Why? Because it's not an imbalance. It's just a point in price where the algorithm will refer back to a reference point. So let's read what Michael says a breaker is. For the ideal setup for a breaker, this is a part of order block theory. Breakers are a part of order blocks. It's actually called a breaker block, right? So ideal setup for a bullish breaker is in major to intermediate term uptrends. So if you're in an uptrend, if you're in a major uptrend or an intermediate term uptrend, you want to be looking for bullish breakers at key points, right? Bullish breaker block is a bullish range or up close candle in the most recent swing high prior to an old low being violated. The sellers that sold this low and later see this same swing high violated will look to mitigate the loss when price returns back to the swing high. This is a bullish trade setup worth considering. I'm going to pause this right here. I'm jumping in quick tonight, right? I don't want to gloss over this, okay? You looking for breakers, just like every other ICT PD array. Do not look for PD arrays everywhere. Understand everything is about time and price. All right. So if price is bullish, if you're in a buy program, if you're in you're on the right side of a market maker buy model, you shouldn't be looking for bearish breakers. You need to be looking for bullish breakers. You're looking for bullish breakers inside a bullish trend when order flow is bullish. That's what it's like we want to throw out order flow and just start looking for PD arrays. Oh, I see a unicorn model. It's a bearish fair value gap and a bearish breaker. I'm going to sell this unicorn model. But the order flow is bullish. We in a buy program. Why are you looking at bearish breakers? That's how we get ourselves slapped upside the head. All right, carry on. Meaning, anybody that tried to play a breakout down here going short, once they trade past this high, they know, oh, I'm on the wrong side of the market. So when price comes back down in there, they're trying to mitigate their loss inside this breaker block right here. They're trying to mitigate their loss because they got stuck underwater going short down here in this case. And for those that understand the concepts, this is the long buy-in or long opportunity or bullish opportunity right here at this point when price trades back there. Now, see, repricing higher after sell stops are taken, that's how they got trapped, right? And then market structure broken higher and retracement will be new buying opportunity. See, that's what all of that says over there, right? This trapped them and this offers an opportunity retracing back in here to go up there like that. Hopefully I didn't confuse you. And for the bearish, just flip all of that upside down. We've been doing this long enough, so you know how to flip it in your head. I ain't got to do both on the sides. Now, see how little Timmy Rogers see it in his head. Price will set a low at section A, at point A, should I say. Point A. Price will rally and make a high. Right there. Point B. Price pulls back and makes a low, C, that breaks the low of A. Pulls back, make a low of C that breaks the low of A. Right? Now, let me say this. Per Michael, the strongest breakers will occur when you take two levels of liquidity. Meaning, you take out short-term buy stops or sell stops if you're bullish or bearish, and then you take out the higher time frame buy stops or sell stops, right? So when price is coming down and making this new low of C, if you're going into a higher time frame low here, just after you're taking this short-term low here, then that creates the strongest breakers when you take 2 stages of liquidity prior to the pound.
Let's pause that right there. Right now, example, this A can be a pre-market low, and what the pre-market low is, the lowest low that's made between 7 a.m. and 9:30 a.m., or a pre-market high on the other side. Y'all got everything, is the reverse. I'm not gonna keep saying that. So an example can be the pre-market low, and then then further to the left is also dropping down and taking out a daily low if it's at the bottom of the box, right? Or taking out pre-market low and dropping down lower and taking out a London low or a Asian low or a regular trading hour low from the New York PM session or the New York AM session from yesterday, right? Or this can be a daily low and also trading into a weekly low further to the left. So you're looking at, you're sweeping a low that's in a shorter time frame than the low that's farther to the left or the high, right? So just to give it some context, like I said, this can be a pre-market low and then trading into a prior session low, a prior day low, or anything on a higher time frame span than that short-term low that we're looking at. And if you're on like the intraday charts, you can be coming down, taking out a 5-minute low, and also further over here, you're also sweeping an hourly low. So you're trading below a 5-minute low and also taking out an hourly low. That's 2 stages of liquidity that have been swept. So the breaker is going to be quote unquote stronger because you're sweeping a higher level of liquidity before getting this displacement away. Now, you always want to make sure you're looking for this at a place where it should be creating a breaker, at an anticipatory reactionary point. Make sure it's in the discount. The breaker is resting in the discount of the dealing range that you're looking at. So you want this breaker to be below 50% of the overall dealing range. Don't be looking for a bullish breaker up in the premium of the dealing range. Okay?
All right. Then the break-in market structure qualifies the B2C leg as the breaker, right? This is the breaker. This is the breaker block here. So when you trade back down into the breaker, then because this leg right here is stopping price, it's blocking price from coming lower. This move down here, it's blocked. So you're really kind of ignoring all of this until it happens, until this happens, that break-in market.
God dog it. This leg hit the breaker block. That's the manipulation leg. That's the, when we look at price and we're looking at it in a sense of the power of 3 with our accumulation, manipulation, and distribution, the leg that comes down to sweep the low, that's our manipulation, right? This is and when you can identify it early, right, you can anticipate this becoming a breaker once you get advanced. And this is how Michael trades it many times. When it drops down from this B2C leg, he's anticipating this to become a breaker because where we're at an anticipatory reactionary point. It's a certain time of day. We're coming down, and once he see the sweep of liquidity and get a change in the state of delivery down here, he may enter off of a lower time frame fair value gap or order block, anticipating this to become a breaker, and then add to his position at the breaker, right? So this is the manipulation leg. And like I said, you're sort of ignoring it because you say, okay, this is manipulation, so I'm going to let this happen I'm going to let it sweep liquidity. And then once it shows me that it's ready to continue up, now I'm going to participate on a real retracement. This is a fake breakout, and I'm going to participate on the real retracement. Okay.
Market structure, that's when you start saying, okay, this is going to block price from coming all the way back down, right? And you get long right here at the last up close candle in the move from A to B. And a gem, if you will, if you run a Fibonacci from the A to B and use standard deviation projections, right, that can give you a target of where to shoot to. So if you see buy side or sell side, if you're bullish, resting near a standard deviation, the easiest or the quickest low-hanging fruit would just be one standard deviation of the A to B leg. That's the low-hanging fruit. But if you see swing highs or swing lows in the reverse, that's very near a 2 standard deviation or 3 standard deviation or 5 standard deviation, depending on what time frame you're looking at it on, that can give you your targets of where you want to shoot to by running a Fibonacci from the A to B leg, running it from A to B and then projecting it out. That's a pro tip. Now, let's look at it on the charts. Here we are. If you see here, we got an anticipated resistance or reversal point, meaning we're coming up on a higher time frame high. All right, it can be up higher time frame PD array, but in this case, it's a higher time frame high. So price comes up. This is our A right here. It retraced back, making a low. That's our B right there. And then we go back up. And not only do we take out this high of A, but we go above our old high, our higher time frame high. We go above the higher time frame high. So when we come back down and get our breaking market structure, there's our last down close candle right there in the A to B leg. So now this area here that we were ignoring this area right here until this happened. For now, I'm going to show you a way that you cannot ignore that when we go to the charts. But we were ignoring this for now until we get the breaking market structure. Now we identify this as our breaker, and we're looking for the B to C leg to block price from getting back above this high when price decides to trade back to it. No matter when it trades back, as long as the narrative has not changed and the draw on liquidity has not changed, we're expecting this B to C leg to block price. And that's why we got our breaker block. We're looking at the last down close candle or consecutive down close candles. And the lower the time frame you go, the more you focus on the last down close candle because you want to see heightened sensitivity there. Yeah.
Now, notice the examples that I'm giving, right? It's movement, right? We got large move. This is a hourly time frame right here. Large moves, right? What we don't want to do is coming inside here and saying I got a high, low, high. We don't want to be inside price here looking for breakers up in here. I've seen people for years teaching breakers looking candle by candle, right? Without giving the disclaimer that the breaker isn't on this time frame that you're looking at. The breaker is somewhat on a lower time frame and you're trading that lower time frame, but they have people because you can go in like these large candles right here. There's a lot of stuff happening inside. Like if you just look at this down and this up right here, there's a whole market maker buy model that's happening inside this little down and then back up on some sub 1 minute time frame because this is an hourly chart right here, right? There's a lot happening in this little move, but that doesn't make
this time frame right here a market maker model, right? And so it's disingenuous to have people looking candle by candle looking for breakers just because that wick went above that, like here, right? They'll be like, okay, we got a high, a low, and a higher high. Now that's a bullish breaker right here. See, we traded back to it and we went up. And they'll be like, oh, that's a bullish breaker right there. We had a high, a low, higher high, traded back down into the bullish breaker. And that's disingenuous. That's disingenuous because that's not a bullish breaker, right? You just happen to see price working off of a fair value gap, right? And an order block. And now you're sitting up here saying, oh, order breakers turns into order blocks turn into breakers. No, that's not a breaker right there. You're just trading off of a fair value gap in an order block. So to say, oh, that's a breaker because you got a high, low, higher high. Nah, you got a bullish breaker right there. No, you're looking for where the elephant steps in the pool. Movement, 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 movement. Back to it. Drop. Right? You're looking for that triangular shape, if you will, like this, that upside down triangle right there. You're looking for that triangular shape, and when you come back to the point, oh, get up out of there. Carry on. And here we are. When we traded back into it here, we price traded away and traded back up, hit the breaker, and sold off. That's an example of the bearish breaker. Now, example of a bullish breaker. And in this example, we're looking at a breaker coming down into a higher time frame area of an imbalance over here. Looking at this hourly imbalance is in line with a higher time frame imbalance, right? So we're coming down to an anticipated support level. We're coming down into a higher time frame fair value gap, and it's in line with a hourly fair value gap. Okay, so price comes down here, makes an A. Doesn't quite get to the fair value gap. That's fine. It's coming to it. It's anticipating to do something there, right? We go up, we make a high. That's our B. And then we trade down, taking out this A and trading down into the higher time frame imbalance in line with the hourly imbalance. See how the bodies of the candles are totally respecting that, right? The wicks even respecting it here. And then we take off getting our breaking market structure. Now that we got our breaking market structure, our last up close candle in this A to B leg, now that's our breaker, and we're anticipating this B to C leg to block price and stop price from coming down to this low. And when price trades back to it, bang out, takes off. That's example of a bullish breaker. Now, let me give you your homework, and then we're going to jump over to the charts, and I'm going to give you a little tip for not ignoring that leg. Remember, y'all see the homework, make sure you go through, do your homework, use whatever instrument that you want to use. I prefer to use the NQ, right? Use whatever instrument you want to use, but go back and do the homework. Now I'm going to skip forward and see what I'm talking about when we get on the chart.
Can I ask a question before you get to
Sure.
Can you go back one screen?
I could try.
All right, perfect. So it's not a break until C is taken, correct?
It when B is taken, when C takes B, now it's a breaker.
Okay, so when C takes B, not when C takes A.
No, when C takes A, you're anticipating this to be a liquidity sweep. So now you're anticipating that to become a breaker. So when you're in tune with the algorithm, and now you know, okay, I'm at my anticipatory reactionary point. So when I see us make a low, make a high, then we dive down, I'm now identifying, okay, I see institutional sponsorship entering the market because we're diving down to a discount. We're diving down into liquidity. We're at a place where we should be doing something, reversing deeper retracement, whatever has you, right? So now I'm anticipating this to become a breaker. So when I see this move at this place, at this time, doing this now, I can look for a trade here and anticipating this to become a breaker. And then I can add here because now it's starting to play out, right? Just based off of institutional sponsorship.
All right, that was my next question. Like if you see that C is getting ready to hit ARP to the left underneath A, you can kind of front run it. It'll be risky, obviously, right? Because we don't really know where it's going. But if you front load it and keep it tight, you can get big dividends off of it.
Yes, yes. This how you can get a larger move or use it to scale because you're anticipating something here. So now you can say, okay, now I'm anticipating this to become my smart money reversal. So when I get this move and I enter here now, I'm anticipating this to be my smart money reversal, and I'm using this as my low risk buy right here because now this is the least amount of risk I'm going to put on in this move going back up toward any liquidity. And so since I've identified the institutional sponsorship coming into the market based off of we're leaving, we got liquidity in the market above, we're dropping down, leaving more liquidity in the market above, we're rushing into a discount, we're rushing into sell side liquidity, we're hitting a higher time frame PD rate. Now we're starting to get displacement away. We got a breaking market structure here with displacement. Now boom, I'm trading this based off of this institutional sponsorship, and I'm either targeting this as my exit, or I'm going to utilize this as a scale in opportunity, and I'm targeting a higher time frame target based off of this leg right here. Remember we said we can use this as a target based off of this breaker, or you can use this leg here. Well, in this case it'll be right there to that swing high, but you can still use this manipulation leg here to give you projections also on how far up you're going to shoot toward a swing high over in this direction using projections off, because you want to see how far this leg can swing up, right? So you measure that leg and look at standard deviations of this leg of how far this price move can swing higher.
Okay. All right. So yeah, because I was thinking maybe get out at B or get out at the relative equal highs left of that.
And that'd be a
and
perfect
get back
way.
in.
Yeah, that's the perfect way to trade it if you anticipating it to become a breaker and you get in early. Now you go on fishing while everybody else waiting for it to retrace back to the breaker. You see what I'm saying?
Yep. All right. Thank you. Well, one quick question, which you don't have to answer today because it's not related to this, but it's related to this. So a mitigation block would be where the top of C would be underneath B, correct?
No, mitigation block would not take out A. It'll just come back down here and then rally up. Like A would be the one that come down, sweep liquidity, hit the anticipatory reactionary point, and then when B comes down to C, I think mitigation blocks tomorrow. But when B comes down and they take out A, C stops there and go back up, then now B is the mitigation block. So the way you just, you know what I'm saying, like can anticipate it is if A comes down and does, in this case, what C has done, then it doesn't come back down and break A. When it rallies back up, then now you're looking for that to act as a mitigation block instead of a breaker. Because the difference between a mitigation block and the breaker is the B to C leg does not break the low or high, right? It's a failure swing. It goes up, doesn't break out, and continues on. A breaker is a false breakout. It goes up, it breaks out, but then reverses. So it's in the old terms that we used to hearing, it's a false breakout is a breaker, and a failure swing gives you a mitigation block.
Perfect. Thank you.
All right. In around on, and you can use the daily breaker here. We got a daily bear over to Le Charts. And on the charts here, we're going to focus on this daily breaker here. We got a daily bearish breaker here. Okay. Now, what we're going to do, we're going to go inside this breaker here, because you see we made a high, we made a low, we made a higher high, and then we broke through, creating the breaker. But we want to go back before we broke through creating this breaker right here. Remember when I told you that when you take out not only the short-term buy side, but the higher time frame buy side or sell side that you was looking at, those are the strongest. So we're going to go into price here when we took out this buy side, and we're going to talk about some of the power of the breaker, right? Where you can not ignore this part of the price leg, but you can anticipate this breaker being formed and get a better entry. Let's go down to a 60-minute. This is a daily chart. Let's go 2 time frames down to the 60-minute. Okay. So we drop down into a 60-minute. And right here, as we are taking not only the short-term buy side here on the 60-minute, as we trade up above, right, we take out the daily buy side right there. And as we go into that, what do? We create a high, a low, a higher high as we take out the daily buy side, creating and then we trade back down and create a daily breaker. So since we're anticipating hitting the buy side on the on the daily, as we anticipate hitting the buy side on the daily and then break down, because we understand that this move up is just, we're going up to break down. Okay, this is our anticipated reversal area. As we go up, go to the 60-minute. As we go up, now that we've hit it, now we're creating a breaker on the lower time frame. Now, mind you, this gray shaded area, that's the daily breaker. It's not created yet, but we're anticipating it to be created. And when we form this breaker here, that's giving us confirmation that price is ready to break down. So now with that information, you can trade a myriad of ways. For example, we go here, take out the buy side, we got a low, we got a high, a low, a higher high. Now we're anticipating this to be a breaker. So now in this area right there, just say you're a turtle soup trader. Once you get this change in the state of delivery here, with this candle coming down and closing below that last up close candle, you can get short right there at the old high, right? Turtle soup trade right there. Once we come down and form the breaker, now we have an imbalance in line with the breaker. Now you can trade the imbalance, the fair value gap, because you got a fair value gap in line with the breaker, right? So then you can take that trade. And also, once price trades down and takes out the sell side here, confirming the daily breaker now, right? Now that we've confirmed the daily breaker, price trades back up into the hourly breaker right there, and you get short on the hourly breaker. So it's on the 8 o'clock candle on April 1st.
Pause right there real quick, right? And you see here, this is what me and Marco was just talking about. If you're anticipating this to become a breaker, right? This is your A to B, B to C, right? And then when you come back down here, right, this is where you're anticipating this to become a breaker, right? You get short on that turtle soup, or you get short on that unicorn model right there, and you short to there, and now you gone fishing because you're out your trade while everybody else is waiting for price to trade back up into the hourly breaker or the daily breaker.
That was an opportunity for a turtle soup sale on trading back up on the 3 p.m. candle, because time is important. 3 p.m. candle, you came back into the fair value gap. That didn't give you a lot of chance to trade there because it just went in there, went to the end of the day. But on the London, with the London, you traded back up and got an opportunity to get short at the London. And then that was on the 2nd, the next day during the London. And then over here on the 4th of April, when you traded back up into the breaker, the hourly breaker, you had an opportunity to get short inside the breaker there. But not only did you get a chance to get short at the breaker, on this time here, if you notice, what did we form as we traded into the hourly breaker, right? We got another high, low, higher high. So we're anticipating this to become a breaker. And so since we're anticipating that to become a breaker, right, this is an hourly time frame. Let's drop down 2 time frames to the 5-minute, go down into the 5-minute time frame. And once we get inside the 5-minute time frame, if you look here, these are the hourly candles that I circled. Okay, move this out the way so we can see it. We got our high, our low, our higher high. Then we break down and give us our breaker. When we look at the last down close candle inside that range right there, you have another opportunity to get short when the candle, this candle here, we trade down below the breaker, creating the breaker. We trade down below the down close candles, creating the breaker. And then on this candle here, we trade back up into it, coming to the mean threshold of the breaker, giving you an opportunity to get short immediately on the 5-minute time frame by dropping down 2 time frames from the hourly. When you saw the hourly breaker setting up, you had a 5-minute breaker setting up. So as soon as you got the 5,
I'm gonna pause it right there, right? And this is when y'all hear me talking about first touch, right? When you hear me talk about a first touch, when you're anticipating this stuff to happen, this is what I mean by a first touch, where you're watching this form. Once you see this come down here and create this breaker, and now price starts to trade back up into it, no matter if it's just on the same time frame, on a lower time frame. When price trades back up into this area, now you're just trusting it on the soon as it touch it, and now you got a small amount of risk that you can put on to say, okay, if this is a low resistance liquidity run and I'm in tune, this should yield me such and such, right? So you got a specific place where you can put your stop right above the high of the breaker, putting on a minimal amount of risk for more reward, right? And I don't want people to misconstrue this as being, oh, this is just hindsight. When you're looking at this in real time, you have to develop anticipatory skills where you say, okay, because price has done XYZ, right? We went up, down, up. As we drop down, we can see that V shape. Remember, say you're looking for that V shape, that slanted V shape, right? We went boom, boom. And we're anticipating this to become a breaker. Why? Because we're at somewhere at a certain time, sweeping liquidity, doing this, and we displace away. Now I can, if I offer this price here, now the next time I trade back up into these candles, I now can say, okay, boom, I got a manageable stop where if price is fluid, I can participate in this run
without having to wait for it to go all the way in, because I don't know when it's going to come back. It may come back immediately. It may come back when I'm not here. It may come back tomorrow. But because I'm using my anticipatory skills based off of my higher time frame, off of my TDA that I already done, now when price does this, then it should do that, and I can enter here. People always be like, well, how do I trade it? How do I enter? There's many ways you can enter. The way Michael teaches it is create it and trade back to it. But once you develop your anticipatory skills, once you see it created, you can say, okay, I can now trust it. And that's how you can start to participate on some of those moves that move faster, and it doesn't give you that retracement opportunity on the time frame you're watching. But if you're watching a 5 minute and now you're looking at this on a 1 minute, think about it now. When we offered this price here, right, then that candle closed, we had 5 more candles that formed this next candle. So if you're looking at the 1 minute time frame, you probably could see some type of expansion retracement here, because on the 1 minute time frame, you got 10 candles that came from this high down to that low, back up to that right there. What is that? That's an expansion and a retracement on a lower time frame, right? So you can anticipate this happening, but then you can see the patterns you like to see as far as expansion retracement on a lower time frame right inside here to help you with your, okay, it's retracing back into a higher time frame PDA rate, and I'm gonna short it off of this first touch. All right, hopefully I ain't confused nobody. Up, so soon as you got the 5 minute breaker set up, trade it back into it, trade it right to the mean threshold. Let's check that with a fib, because it looks like it's right to the mean threshold. We go from the high to the low of the candle. Let's lock it on. If we go from the high to the low of the candle, the mean threshold of that 5 minute breaker is 52.9475, and the high of this candle right here is 52.9475 exactly. So it came right back to the mean threshold of the breaker, and it dropped. Now mind you, if you were trying to get picked up on the mean threshold and it goes to the tick, you may not get picked up, because you need that one little, just that the little mohawk above one tick at least in order to get picked up. So with that brings us to the end of another episode of The Art of Reading Price Action.
That's the end, folk. That's the end. Hopefully,
it's your boy.
Shut up, Tim. Hopefully y'all learned something, man, or picked up something new. Tomorrow will be mitigation blocks. As I talked about, where we are, breakers. Yes, tomorrow is mitigation blocks. Tomorrow Friday, right? Yes. So tomorrow is mitigation blocks. We still have a few videos to go. So next week gonna be kind of busy for me, right? Because we're starting the tape reading Monday, right? But we still have to finish the rest of the series, because we started late because of, y'all know what happened. So tomorrow we got mitigation blocks. What's going on, Sing?
What's up?
Chilling.
Yeah.
What you got going on, cuz?
You like the fit? It's a calm, like sweatpants and hoodie.
I mean, you looking real? Nah. Yeah. I like the fit.
Man.
I like the fit. But we got mitigation blocks tomorrow, Monday, IPTA price delivery, Tuesday, order flow 1 and 2, Wednesday, market maker models, and then Thursday, the power of 3. And then that'll be the end of the series. And then, yeah, so that first week that we lost, we're not going to be able to complete the series before we start the tape reading. But we are going to start the tape reading on Monday, and next week is just gonna be busy for me. So in the morning, on Monday, Wednesday, and Friday, we're gonna tape read in the morning, and then that night we gonna do the video, and then on Tuesday we got Tuesday and Thursday we got to figure out what time we gonna actually do the lesson. We may have to since we're doing the tape reading from 7 to 8, we'll just do the tape reading and then just do the lesson at 8 o'clock. Instead of trying to change stuff up, we'll just do the tape on Tuesday and Thursday. We'll do the tape reading at 7 o'clock and then get into the lesson. Let me see. Tuesday and Thursday. So that's just 2 days where since we're doing tape reading on Tuesday night and Thursday night, we're just gonna run the lessons through the weekend. So we're gonna do it this week. We're gonna do a lesson Saturday night and Sunday night. So that'll cut off 2 days. And then Tuesday and Thursday, it won't be no lessons, and we'll be done. Hold on, let me see. So let me see if that'll work out. All right. So mitigation blocks tomorrow. IPTA Saturday. Order flow Sunday. Market maker models Monday. Yes, and then Power of 3 Wednesday. Yeah, that's what we'll do. So we're gonna run lessons. We're gonna run lessons. Saturday and Sunday this week, and then we'll have a lesson on Monday and Wednesday. And so next week, Monday, Wednesday, and Friday, we'll have tape reading in the morning, and then Tuesday and Thursday, we'll have tape reading at night, right? And the last lesson will be Wednesday night on the Power of 3, right? That way, we'll have all the lessons out of the way for at least one more tape reading session for the morning and night, right? All right, that's it. Gang. We got any questions from the gang? Gang. I listen to the music with my gang. I done something with my gang. Gang. Y'all got any questions? Rhonda, any questions? Going around the table. Rhonda, any questions?
No questions.
Joe, any questions? Okay. Jim, any questions?
No question.
Deborah, that's RN Deborah. I know she ain't got no questions. She hiding at the nurses station right now. Yolanda, and you see how it sound muffled? She got us in her lab coat pocket. You know what I'm saying? And she peeking down like this right here. Yolanda, any questions?
No, sir. I'm good. Thank you.
Marco, any questions? Yolanda, you outside?
No, thank you.
Yep, at soccer practice. I love it.
I knew it. I heard some kids in the background. I said she sound like she at the soccer field. Nah. G Ferd, any questions?
No, I'm good, man. Thank you.
Valentine, any questions? Okay. That's it. Appreciate y'all for hanging out with me. Do me a favor, press a like for the algorithm. If you're not subscribed to the channel, what is you doing, man? Subscribe, turn on all notifications. If you'd like to be a part of the gang, second link in the description below is $50 a month. Pull up, try to have a good time over there. Apex running 90% off right now.
It's like the third link in the description below. Use my code. I ain't got a fancy code. It's the weird code they gave me. 90% off right now. 1 day to pass up until the 24th of February. $75 activation fee for 100K and below. Like I tell everybody, man, just go for the smallest account size. You know what I'm saying? 25K. Just got to make 1,500. Once you pass it, you just got to make 1,600 to be able to withdraw 500. Right? If you want to withdraw the full 1,500, right? You just got to make 2,600 to be able to withdraw the full 1,500. If you want to withdraw the full 1,500 and stay above your threshold, then you just got to make 3,100 to withdraw the no, not 3,100, 36. Y'all know what I'm saying. So 1,500 above 1,600. Y'all know what that is, right? Do the math yourself, right? That's all I got, man. See y'all tomorrow night at 8. What's the day? Thursday. What's the day? Thursday. All right, gang. I'll see y'all in the morning for the pre-market analysis. Remember, the pre-market analysis is not recorded. You need to be in Discord in the pre-markets analysis channel to participate in it. Right at 9 o'clock, 9-ish. Be there for the pre-market analysis, and I think that's all I got. Yeah. As we head out the door, y'all give it up for yourself for taking the time to try to better your understanding. And with that, if you don't know who I am, or if this first time tuning in, my name is Timothy Rogers Sr., aka Aranya Grande. And until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, y'all be safe out here in these trade streets, man. Gone.